Investing for Beginners 101. Hi there, it's Luigi and welcome to Catapult Capitalism, your guide in making smart financial moves for your future. If you like the content in this video, make sure you smash that like button, subscribe to the channel, and hit that notification bell so you'll be notified when we upload more videos. Now then, let's get started. For newcomers in investing, there is a wealth of financial knowledge, tools, and guides available, including robo-advisors and many more. But where should you begin? The most common myth about investing is that it is only for the wealthy and that you need a large amount of money to get started. This may have been true 10 years ago, but it's no longer the case today. The technology and advancements in the field make it much easier to invest. With all of these developments, there's no excuse for newbies not to invest, so use these tips to get started. Today we'll be talking about what to take note of when you're a beginner in investing. Now, let's begin. Number 1. The golden rule in investing. The rule is to never lose money. The investment genius Warren Buffett created this principle and has earned a fortune by applying it. The best way to do this is to invest while stocks are cheap, so when normal rates return, you'll have saved a lot of money by paying less than the original price. Risk-taking can be great and sometimes benefit you, but only when you take calculated risks. Avoid short-term investing and go for long-term investments with guaranteed returns. Some people may have made some money through predictions in the market, but many people have also lost money this way. Short-term trading has several fees and many uncertainties that might result in big losses. Many other billionaires have made their fortunes through long-term trading, which has become increasingly important. Number 2. Build a portfolio plan. Define your long-term goals. In other words, how much money you want to make. What financial goals do you have? How much do you want to be worth? Then, find profitable investment possibilities whose return rate would give you the earnings you desire within the given time frames. Use this as guidance while investing. Number 3. Paper trading. Real-life experience without risking real money. This method allows you to trade stocks, track profits and losses, and do everything else you would do in reality. Many platforms now enable you to practice your skills for free. Take this as a practice run before you start investing real money. Think about it. What have you got to lose by starting here? Number 4. Stocks. Buying a single company's stock can be a great way to start investing. Investing in the right firm might offer annual returns of up to 15%. This is the same method Warren Buffett has employed to milk the market for 60 years. So, how can a newbie invest? The most critical factors are choosing the right company and timing. You'll have to investigate the chosen company's past performance, management, financial statements, and perimeter. Don't invest immediately after finding a company that fulfills your criteria. Keep an eye on the company first. Keep a watch out for price drops. When those stock prices drop, that's when you buy. This will provide you a great deal and profit once the company revalues. Keep your emotions in check when investing. Understand that markets are unpredictable and even the finest companies can suffer. Don't panic or make impulsive decisions due to sudden changes. Wait, be patient, and assess the issue before acting. Never let fear influence your buying and selling decisions. You often will, if not always, be wrong and do exactly what the market wants. To invest now, you don't need a lot. You can start with $1,000 and quickly build your account to tens of thousands. Avoid investing in penny stocks. Penny stocks are equities worth less than $5. These cheap stocks can be appealing, but they're unstable, and there's little to no information about them online. Most penny stocks are for new public firms. Number 5. Investing apps. Newbie investors are now rescued by technology. There are now many investment apps for beginners. Some even round up credit or debit purchases and put them in ETFs. These apps can act as robo-advisors for your portfolio. There are also apps that will teach you how to invest. Most are free and can be viewed on any device at any time. If you've made it this far and you like this kind of content, please smash that like button, subscribe to the channel, and click the notification bell so you'll be notified whenever we put out a new video. Now, let's get back to it. Number 6. Exchange Traded Funds, or ETFs. ETFs are similar to index funds. They both track the same market index and invest in the same way. These funds also have lower fees than mutual funds. The main difference is that ETFs are traded throughout the day and have a changing share price. This share price is the ETF's minimum investment amount, which can be as low as $100 or as high as $300. They're traded every day like stocks and pay commissions. There are many ways to make money, but they need a lot of research and diligence. To fully succeed with them, you need to be a full-time investor. Number 7. Index funds. Index funds are mutual funds on autopilot. It's a great alternative to hiring a portfolio manager. An index fund instead tracks an index. A market index is a grouping of investments that represent a market segment. In the S&P 500, 500 of America's largest corporations are included. The S&P 500 fund will buy the stocks of the companies in the category. Expenses are cheaper since the funds track the broader market index rather than having a professional portfolio manager. Like mutual funds, index funds allow you to buy a piece of the market all at once. Many index funds have a minimum investment requirement. However, some brokerage funds don't. That's wonderful! Long term, this investment is better. Number 8. Date mutual funds. Target date mutual funds are like retirement plans. If you choose this option, your money will be invested automatically. An investor buys a share in a mutual fund, thereby investing in the fund's whole portfolio. Professional managers control how the fund is invested, although each fund has a specific theme. A stock mutual fund, for example. Most targeted mutual funds hold a mix of bonds and stocks. If one expects to retire in 20 years from 2020, they can choose a mutual fund labeled 2040. Upon expiration of the contract, the investor will be robbed. Number 9. Robo-advisors. As the name implies, there are robots that develop portfolios and select investment possibilities for people. Robo-advisors are a terrific alternative for novice investors. Robo-advisors use computer algorithms to handle your assets. Their systems have low overhead costs, therefore, their rates are less than paying brokers to administer your account. Using a robo-advisor costs between 0.25 and 0.50%, whereas hiring a personal financial advisor costs between 0.5 and 5%. This is a good option for a newcomer with limited funds, but it doesn't mean you shouldn't keep an eye on your money and what's going on. If you want to learn more about the processes, some advisors offer instructional content and tools available. It's a proven and cheaper way to invest. Number 10. Employment retirement plans, or 401k. Beginners should start with a retirement plan. Some employers will match your contribution, so if you put in 2% of your pay, your employer may match it with 2% as well. It may seem modest, but it is free money that grows over time. You can now contribute up to $19,500 to your 401k and $26,500 if you're over 50. The beauty of this investment plan is that you can start with as little as you can afford. When you select a plan, the amount is deducted automatically. In the long run, most retirement plan deductions are pre-tax, saving you thousands. Compounding also plays an important role in developing your money. Compounding can turn a small monthly commitment into a large sum in a few years. With that being said, where will you be starting your investment journey? Please share with us in the comments. Well, that's it for today. We wish you all the best in your investment journey. If you enjoyed this video, it really helps if you smash that like button, subscribe to the channel, and make sure you hit that notification bell icon so you'll be notified with our future videos. Thank you so much for tuning in to Catapult Capitalism, and we'll see ya next time.